Good morning, everyone, and thank you for joining us this afternoon. My name is Con Hurley. I'm the director of the Center for Finance, Law, and Policy here at Boston University. I'm delighted to see Bill Chambers here, a member of our steering committee, and several graduates of Boston University. I'm deeply in debt to the Hariri Center for Computing and Computational Sciences, that's a mouthful, for co-sponsoring this along with the graduate program for mathematical sciences at the School of Management. We live in interesting times, and no more so than after the financial crisis of 2007, 2009. Some would say the ongoing financial crisis. Our senior senator here in Massachusetts has filed legislation to bring back the Glass-Steagall Act. If you read Bloomberg's lead editorial today, they're talking about regulating the shadow banking system as banks with traditional capital and liquidity requirements. And yet, while that is going on, there are disruptive forces in the market and in the marketplace that we all have an interest in and will be watching closely. Lending is threatened by something called peer-to-peer lending, making us wonder what is the future of lending officers from your neighborhood bank. Deposit gathering has been replaced by internet banking and remote deposit capture. Investment banking is threatened by crowdsourcing, and on and on. And it used to be said that banks were special because of, obviously, deposit insurance, but among other things, the bank's dominance of the payment system. Well, along comes PayPal and other alternative payment devices, and along comes something called Bitcoin, which takes our central banks largely out of the equation. We'll be hearing more about that later. So these are definitely interesting times. Are we going backwards or are we going forwards with these disruptive technologies? So we're very fortunate to have with us today Jeremy Allaire, the CEO of Circle Internet Financial, and his general counsel and chief compliance officer, John Beccia. Jeremy has a long history, if you can say long in terms of 2 decades, of bringing forward disruptive technologies to take advantage of the internet and make disruptive technologies deliverable to the masses. Allaire Corporation, Bright Cove, among others that he has taken public and turned into successful enterprises, and now Circle Financial Incorporated. John Beccia comes from a more traditional banking, having been a leader at the Financial Services Roundtable in Washington, D.C., one of the major trade associations for the major banks in this country, and then counsel to Investors Bank and Trust, and then later counsel to Boston Private Bank. So it's John that will keep Jeremy and Circle on the straight and narrow. Right? And so the format today is we're going to hear from Jeremy for several minutes, and we're going to hear from John. And then we've left ample time for you to throw out whatever your questions you have, and I understand that no questions are out of bounds, or you'll let us know as we go along if they are. And so I'd like to hand it over now to Jeremy Allaire.
Good afternoon. Thanks for coming out today. We just launched our company last week, which is great. Works out. But have actually been working on this project for some time, and I think what I was hoping to do today was really mostly just provide what I think is a good conceptual introduction to digital currency, what it is, why is it coming into existence right now, what are the benefits, talk specifically a little bit about Bitcoin, which is the most popular digital currency technology in use today. I'm not going to talk much about Circle, really not at all, just other than one remark. And then John is going to talk to, in detail, the legal and regulatory environment that surrounds digital currency, which is very much emerging as well. So, first, sort of, what is digital currency? Why does it matter? What are the market opportunities for it? I just went through that slide. Never mind. A little bit about my background. I've been an internet entrepreneur in software platforms and online services for about 20 years. As noted, have built several and helped to lead several public companies in the internet software and online services space. And as noted in the introduction, most of my work has been focused on how can one apply the sort of open, decentralized nature of the internet and open platforms to disrupt industries. So the first company I worked on was really about disrupting how software was built and distributed. And then Macromedia, which was on the way to Bright Cove, was really about changing the nature of the experience of the internet. And Bright Cove, which I founded in 2004 and took public last year, it's really about the disruption of the video and television industry, moving from kind of closed platforms like cable and satellite systems to open internet distribution over open protocols and standards. And digital currency really fits there in that it's really represents the internet's first large-scale attempt at disrupting the financial industry in a variety of different ways. And so it's, of course, potentially very threatening to the existing financial services industry or to central banking function and things like that. I don't think it has to be viewed that way. I actually think, like most other significant internet technologies, they create really significant opportunities for incumbent players as well. So founded this company earlier this year. Just a moment about Circle. We're building a set of online services for both consumers and businesses to be able to make everyday use of Bitcoin and digital currency for sending and receiving money, for making payments, both online and in an in-person kind of environment. So what are digital currencies and why now? There have actually been many attempts since the early years of the internet to create what one might call a digital currency. But I really think there are a number of fundamental things happening in the world that kind of came together in 2008 and both a little bit before and a little bit after. And some of these seem like they're very straightforward, but I think they're helpful framing. So clearly, continued massive global adoption of the internet, sort of connecting every person on the planet to a common computing and communications infrastructure. The associated globalization in commerce, transactions, communications, culture, all of these things is sort of playing out in front of us, and we've seen its impact not just in things like e-commerce, but in even the political realms as individuals, youth, others feel more empowered based on the knowledge they have about the rest of the world. What I call the birth of global identity. Social networks really represent, Facebook, Twitter, others really represent the first time when people's identities all around the world, irrespective of their nation state, are really connected together. As one of my colleagues likes to say, Facebook's the second largest planet after China, or second largest country after China, and probably will surpass China in the next year in terms of population. And I think in parallel, we've seen this sort of birth of smartphones and rapid rise in smartphones, which really for the first time puts very high-powered computing devices in the hands of the masses and all connected instantly anywhere in the world. And then lastly, which I think is a good segue here, is sort of the global financial crisis of 2008, which I would characterize broadly as a crisis of trust. And so it's not surprising that digital currency and Bitcoin specifically emerged right at that time when it wasn't clear. If you remember, I like to say January of 2009, you can all remember that month, and you can all remember thinking, I'm not sure if my money will be in the bank in a week or a month. I think many people genuinely felt that, and so it's not surprising that innovative, entrepreneurial mathematicians, cryptographers, and software architects got together to try and create something that could operate globally, freely, and in a decentralized manner. In fact, one might say that was the prudent thing to do at the time. So there's a lot of phrases people use for this stuff. We use the phrase digital currency. People have used virtual currency, which I think is really in reference to older things like Linden dollars, an idea of a kind of currency in a game. There's math-based currency is a phrase people use, and cryptocurrency is very popular as well. But I think they're all basically referring to the same thing. But our feeling is that digital currency is the right meme and idea as well. But it's important to note, a lot of this does have roots in what I call crypto. And cryptography in the internet world really has a deep focus on security and privacy. Things like PGP encryption are critical to how people can have secure email communications. It's oftentimes infused with a bit of libertarianism from an idealistic perspective. But at the same time, though, it's very globalist in its intention. I think a lot of the kind of cryptographic thought leaders and folks that are involved in this really look at this as how do we build standards that connect everyone in the world in a common way. And as noted, a very deep focus on security and privacy. Those are really critical concepts here. And why do people call this math-based currency? What does math have to do with all of it? As I like to say, math is really at the center of almost every aspect of digital currency. So a few examples. So in a currency like Bitcoin, the money supply is itself mathematically predetermined, and it's predetermined over a period of time. And so unlike government-issued currency, there's no way to manipulate or debase it, at least in terms of the kind of M0 money supply. The incentive system, which I'll touch on in a little bit, there's an incentive system that actually refers to something called Bitcoin mining, which, again, I'll come back to. But there's an incentive system which creates a large network of computers that both secure the network as well as perform the process of transaction processing, confirming transactions, and things like that. That whole incentive system is designed around a set of math puzzles, computer-intensive math puzzles, which generate value, as you'll see. Bitcoin itself is built on top of what I would describe, or others describe, as a global general ledger. So there's a giant general ledger. It's public, it's shared, and it's the unit of account for every coin in the system. And it's governed by a math-based system of record that is very public and very easy to audit. And then finally, math is at the center of the encryption, security, verification, and privacy mechanisms of the protocol, kind of underlying cryptography, which is based on a pretty advanced mathematics. So we've had this explosion of digital currencies. Not a lot of people know about much more than Bitcoin as a concept, but since 2009, I've seen estimates of nearly 150 different digital currencies that have been launched. Collectively, these are all called altcoins. And many of them are actually based on what are called forked versions of the Bitcoin technology. So Bitcoin is itself a free and open source technology. Anyone can use it, sort of like Linux is a free operating system, or Android is a free operating system. So it's a free and open source technology. So anyone at any point in time can take that code and say, you know what, I want to improve it. I have a better idea for how you'd secure a transaction, for example. And then they can fork it and create their own version of it. It's important in the digital currency space that these have deep network effects to be successful. And so I'd say 99% of these have really just been projects that people have worked on as opposed to functioning monetary systems. So again, why is this happening now and so on? I think there's some very high-level things that are going on in the world. What I would refer to as sort of the Triffin dilemma, which is a world where, today on a global basis, we operate in an international dollar reserve system, and we're operating in an environment of intense fiscal and monetary intervention in the U.S. that's focused on the U.S. economy. But because we operate in a dollar reserve system, that has a dramatic impact on the rest of the world, where the policy decisions of one domestic economy have a dramatic impact on the monetary results in other economies, and we've seen that even in recent taper talk. But I think there's, in general, on a global basis, some concern post-2008 with a system that was designed in a very different time, and one where significant polar components of the global economy, the yuan and the Chinese, and as well the euro and the European economy, are concerned about the long-term stability of that system. And that isn't necessarily driving the kind of young activists and entrepreneurs and others that are working with this, but I think it's a backdrop that is important here. We saw this post-2008 crisis of confidence in large banks and central banks. There was a genuine question asked at a man-on-the-street level: do these institutions work? How have they failed us so deeply? And so I think when you look at the rise from a kind of consumer and entrepreneurial interest, it's sort of a sense that, hey, there are probably potentially better ways to do this, and let's all take a crack at that. I talked a little bit about global identity. I think this can't be underestimated, the degree to which individuals that participate in the internet economy as day-to-day users identify themselves as part of a broader global environment, especially as you skew younger. And I think that has an impact on the desirability of currency that actually can act globally. And then I touched on this sort of explosive growth in mobile platforms and broadband platforms. Digital currency was really inconceivable in a world where you couldn't carry it around in your pocket, so to speak. And I think we're now in a place where, whether it's feature phones or smartphones, there's an enormous population of people who carry around these digitally connected devices, and therefore, for the first time, it's viable to think about using those devices for payments and other forms of financial interaction. So what are the market opportunities, so to speak, for digital currency? In general, I think we've seen over the past 20 years open internet technologies with a lot of great entrepreneurship behind it have a pretty dramatic impact on a lot of industries. I think if we stepped back 20 years to sort of pre-web, if we said, you're going to be carrying around a device in your pocket that allows you to instantly communicate in video with anyone else on the planet at no cost, you'd be, laughed out of the room. If you go down the list of innovations, 20 years ago, if you had said every piece of knowledge in the world is going to be instantly searchable to you at any time and at no cost, you would have said you're a lunatic. And so on and so forth as you go down the list. There's a kind of a tsunami metaphor that the internet has brought forth in kind of introducing technologies that play themselves out on the global stage. And I think it's exciting to think about that really finally being able to be applied in an area so fundamental to the way society operates as currency and the financial system. So first really key thing here is there's tremendous potential here to radically lower the cost that's associated with retail payments and sort of person-to-person money transfers. And the economics here are very, very compelling. A model where essentially there's zero cost to process an electronic payment, and there's zero cost to make a money transfer on a person-to-person basis. A second really, so that's sort of fundamental economics, taking cost out of the system. A second really critical piece, and I think this is as important, is how do we improve the security and privacy that's used for payments, and how do we reduce fraud? One way to think about this is today, when you walk into a restaurant or a bar, or you buy something online and you give out your credit or debit card information, the codes that you're making available in plain text in general, you're essentially handing out the keys to your bank account every time you interact with a counterparty, which is, when we step back and think about it, it's almost insane. And so it's not a surprise that we've seen this tremendous amount of growth in the amount of fraud that merchants have to deal with, and we've seen tremendous amount of growth in identity theft as well. These are really fundamental problems, and cryptocurrency and digital currency specifically introduce some really exciting ways to address that. So to lower the incidence of fraud and to allow people to have remote interactions and electronic payments that increase privacy as well. And so that's a big issue that I think digital currency is focused on addressing. Lowering the cost and complexity of cross-border exchanges for both consumers and businesses. This is similar to the kind of lowering the costs with kind of retail payments and person-to-person transactions. The consumer global remittance business today is a $500 billion business worldwide. It has average transaction fees of 7 to 9%. And so there's an enormous tax, in a sense, on what is oftentimes a segment of the population that is not as financially viable and is underbanked in many instances. And so it's could almost be described as a very unjust system. So some very significant potential economic advantage there. And then, related to that, the fact that there is this ubiquitous mobile infrastructure that we now have around the world makes it conceivable to deliver very cost-effective and easy-to-use financial products to about 2.5 billion people. Roughly out of 4 billion people who have mobile phones in the world today, 2.5 billion of those people do not have bank accounts. And so there's a tremendous opportunity for the underbanked to have easy-to-use, digitally based services to conduct basic payments and basic person-to-person financial transactions. We've seen examples of this take hold in Kenya. Some may be familiar with M-Pesa, which is it's a centralized digital currency system run by the telecom operator, but it now accounts for 30% of the GDP of Kenya is conducted in this digital currency, all on mobile devices. And that's, again, a closed system. What happens when there's open standards and open systems that are as open as email and the web and can interact with anyone in any country? We think that the potential is very large. And then I think finally, and this is probably the least significant, but I think is important, is changing the consumer's experience of using money. And a lot of people say, hey, it's not so bad. I have a credit card, I swipe it, they give me a paper, I sign it, I type in a PIN, or all these, or I handle cash. And the kind of user experience of money, we think, that's not so bad. What's the big problem? I think we will look back in 10 years or 20 years, and we won't believe that that actually existed, in the same way that we can look back 20 years and say, you know what, the only way to communicate with someone internationally in writing was to send them a letter that would take a week for them to get it. Or fax was a breakthrough. And so I think we're going to see these very significant, but in some ways incremental improvements to the user experience of money. And that's made possible by operating on an all-digital architecture. And I think we'll look back and hopefully forget those earlier times. So Bitcoin specifically, one thing to note here, there's always, every article you ever see about this, there's always a picture of Bitcoin. Bitcoin don't actually exist in physical form per se. And so it's a bit of a, people think, those look shiny, they look nice, I want to get one of those. They don't really exist that way. They purely exist in a global general ledger on the internet. But as we'll talk about, you can actually print them and use them in physical form. So what is it and how does it work? If you don't know what that building is, that's the Bank of International Settlements in Basel. So I think they're going to be interested in Bitcoin over the long run. So first, you really need to think about Bitcoin as a set of open standards and open source protocols, as well as a network of computers that run those open source protocols. And all of that combined is used for issuing money, making payments and money transfers, as well as for the secure storage of money, as well as for the accounting of the money as well. And like many other technologies that have gotten to kind of 5 billion user scale, it's based on open source and open standards, not dissimilar from how you might think of email. Today we all use email through all of our apps and services, but underneath it is a set of open source, open standard protocols that anyone can build on top of, and that's distributed and decentralized all around the world. There's no centralized message hub that everyone's message goes through, maybe save for the NSA. And but similarly, it operates in a similar model. There's nodes that can communicate with each other with these open standard protocols. So related, and I think I touched on it, it is a peer-to-peer technology, and so it's distributed and decentralized. It does not rely on a single centralized server or system to clear transactions or perform the functions. And it's built on some of the most reliable cryptographic standards for security and its verifications functions as well. So I like to think about this as sort of money over IP. Bitcoin is to money what voice over IP is to telephony. And in a similar manner, 10 years ago, we didn't think it was possible to have instant free voice and video communications anywhere in the world. Well, we now have that. And that was a very scary thought to traditional communications companies, but it's now come to pass. I think we're in a similar place here where in 10 years or some reasonable time frame, we'll have free and instantaneous money over IP. And so that's in some ways a helpful benchmark in thinking about this. So I know this is hard to read, so I'm going to explain this and sort of explain the basics. So basically, this is a kind of person-to-person scenario. Alice wants to send money to Bob. Essentially, each party has a set of cryptographic keys. Public keys, or the public addresses, represent where they would receive money at. And then a private key is used by a user who possesses Bitcoin to authorize changing the address of where money resides. So Alice, essentially, let's say Alice has 10 Bitcoin in her address, in her wallet, and wants to transfer one of those to Bob. Essentially, what she's doing is she's using her private key to authorize, and it's done through essentially sending a message to the network that one of her Bitcoin is moving from her address to now be located at this other address. And the message gets sent out to a network, a large distributed network of computers, which actually verify and confirm that the transfer has taken place and do that in a very secure fashion. But it's essentially just an accounting system on top of these addresses that exist out on the internet. So what does it mean to exchange local currency, or what some call fiat currency, local currency, for Bitcoin? What does that actually involve? Well, basically, there are a few ways to do it, but you need to have a wallet, or what's often referred to as a Bitcoin wallet. That can be on a desktop computer, that can be on a mobile device, and that can also be what I call a cloud wallet, which exists as an application on the internet. It's sort of in the cloud, in which case the user could get to that wallet from any device that has access to the internet. That user, Alice, would deposit local currency from a bank account into a Bitcoin exchange. So that exchange is where the purchase and sale of digital currency happens. That's typically done through some electronic link between the exchange and the user's bank account. So an ACH debit, a SEPA debit in the EU, etc. Once that order has come in, the exchange will actually essentially maintains an order book of orders to buy and sell, and they maintain reserves of both dollars in the US case and Bitcoin in another case, and match buyers and sellers and affect that transfer, and that Bitcoin then goes into that user's wallet, and they then have those and can hold on to them or spend them or send them around, etc. So basic kind of flow for how that works. There are a lot of use cases for how a consumer may choose to take advantage of this. So once Alex has that Bitcoin, she can make payments in a variety of contexts. She could send them to a person, so send them to a friend or family as a reimbursement for something. Can use them at a merchant physical point of sale, so using QR codes. Have you ever seen at Starbucks how you can sort of pay with a QR code, or Dunkin' Donuts, you can pay with a QR code? Similar models emerging here where you hold up your wallet app and it scans your QR code, and essentially your Bitcoin is then transferred to the merchant at a physical point of sale. Similarly, in an online environment, you browse to a website, hit pay with Bitcoin, it would present a QR code, you'd hold your phone up, and it would pay the merchant using an online payment without typing anything into your computer. The remittance example, which is another form of person-to-person, but essentially you're in, let's say you're working in the UK and your family is actually from India or is from Indonesia, and you earn money and you want to be able to send that easily and not be paying exorbitant fees and have it be secure. This is a way to do that very easily at 0% transaction cost as well. And then finally, that's not often talked about, but it's really important, is that because of the way Bitcoin works, it's divisible. Unlike a dollar, which you can divide into a penny, it's divisible to 8 digits, and so it's very, very I don't know if fungible is the right word, but it's a very flexible system. And because there's effectively 0% transaction costs, it becomes possible to price things in micropayments. So that could be micropayments for metered usage of something, where you're paying a fraction of a penny a minute, but you may consume hours, and you want to be able to have a way to bill for that. More relevant is essentially digital goods. So there's now a very large, many multi-billion-dollar industry of digital goods, and digital goods that can be priced very, very, very low could become a very efficient way to price content, games, in-game purchases, and things like that as well. You could imagine micropayments for reading an article that actually becomes a usable model for pricing of a single view of a single piece of text content, for example. So how does this work for a business that wants to accept this? So here's Alice. She's on the acme.com website. She selects something that she'd like to purchase and decides she'll pay with Bitcoin. The merchant then sends Alice the address of and the cost of the item she selected, the Bitcoin address where they will receive payments. Once that user initiates the payment, essentially she uses her wallet to spend the 9 Bitcoin. I guess that's what we price this good in, which is expensive. That's $1,800 today. 9 Bitcoin is sent to the acme.com address, but it's sent through the blockchain. And the blockchain is this global general ledger and this distributed network of computers that keeps track of who has money and confirms the transfer of money between addresses. So that network then confirms that transaction. The miner, and I'll come back to mining, who actually confirmed the transaction first, is awarded a very small fee. And then that merchant is now an owner of those Bitcoin. The Bitcoin are associated with that merchant's address. And then typically the merchant would perform a same-day withdrawal of the funds out of digital currency and into the currency they pay their staff in. So in this case, they'd withdraw through a separate ACH transfer into their bank account of US dollars. Also, that transaction, meaning the sale of that digital currency into local currency, happening through an exchange. So for a merchant, it's a way to essentially accept a secure, very private electronic payment that is instantly confirmed, and it's actually settled within minutes compared to days, and do that at 0% transaction cost, and then do a same-day withdrawal into their bank account at a very small fee. And so it's a very cost-efficient model. This is sort of theoretical in some ways. There are projects that are being built to kind of allow this to happen, but this is one of the principal things we're doing at Circle. I mentioned earlier, so maybe before I move on, that's just high level on Bitcoin, and there's a lot more that we could talk about there. Some interesting stuff happening with this, though. There are all kinds of projects. There's thousands and thousands of projects that have sprouted up around this technology all around the world. It's one of the exciting things about it is the amount of kind of technical innovation and entrepreneurial activity happening. This is an example of a group that has created a simple way to do printable offline or paper Bitcoin. The important thing to note is that the actual ownership is established in this global general ledger. The way in which you can actually spend money is controlled by a private key, and that private key is a cryptographic key. And so if you want to take your money offline, all you have to do is write that key on a piece of paper, delete that key from your computer, and it is now offline. And unless someone has that piece of paper, that money can never be spent or stolen, period. And so it creates some interesting scenarios for how do you secure Bitcoin, how do you do cold storage or offline kind of storage and security of those assets as well. There's also going the other way, which is exchanging at a kind of ATM-like experience. This product just shipped commercially in Canada, is the first market. The Canadian government has been relatively receptive to digital currency. And this is showing up in restaurants and bars and things like that who want to do this. But it's a fully capable ATM. It has multiple levels of security and identity verification built in, and it allows you to feed it, Canadian dollars in this case, and it'll transfer those into Bitcoin into your digital wallet, or you can bring your digital wallet, scan it, and it'll spit out Canadian dollars. And so it's a way to if you need the legacy paper money, it's a way to do that as well. So what backs the value of Bitcoin? There's obviously a question a lot of people ask. So first and foremost, you need to understand that it is a free-floating exchange. It freely floats with fiat currencies. It freely floats, I should say, on digital currency exchanges, of which there are dozens of them around the world. The fastest growing and largest exchange is now in China. That just happened recently, that they grew that fast. It's becoming a significant phenomenon there. And the value is today very much based on scarcity because there is a limited supply of total Bitcoin in circulation. But it's really fundamentally valued based on its trade utility and the economic value that actually happens in it. And so in some ways, the best way to think about it is Bitcoin is backed by the real trade happening in the Bitcoin economy itself. The more that Bitcoin is used as a place to both store value as well as exchange value in payments and money transfers, the more value it will become, the more valuable it will become vis-a-vis other currencies. In part, that's again is based on the fact that it's a fixed supply, and so by definition, the more capital that flows through it and in it, the more value it has to have relative to another currency. It's just the laws of physics. Over time, I think that one way to think about this is, its value is backed by the trade value or the macroeconomic activity in the digital economy. The more that there's economic activity there, the more that will back and sustain its value. There are obviously real challenges because it's a free-floating exchange. You don't have your traditional market makers like central banks who can provide price stability, and that creates higher price fluctuations. The price fluctuations today, though, are really not so much based on the lack of a central bank. They're really just based on the fact that it's a very low volume today. The volume of transactions that happen is absolutely tiny compared to even a mid-cap equity on a public market. And so it's very, very limited trade, very limited liquidity as well. But I think what we'll see happen is as the trade value and utility value grows, you'll see institutional firms, if not governments, play a role of being a market maker, an active market maker to provide both backing stops against selling as well as providing overall price stability. So I briefly alluded earlier to this concept of Bitcoin mining. It's a bit of a misnomer. There's nothing being mined in the sense that we're not digging in hills like we would or digging in the ground as we would for precious metals. But it's used as a metaphor in part because the way the system was designed, it was designed such that over time it will just become more and more difficult for newly issued Bitcoin to happen, and that difficulty rate continues to grow, and it's not dissimilar from the growing difficulty of actually extracting and finding incremental precious metal. So that's really where the metaphor comes from. But specifically, Bitcoin mining is really built around an incentive system for people to operate computers that process and confirm transactions on the Bitcoin network, as well as secure the network from external attack or manipulation. And so that incentive system is such that, let's see what I have here. Yeah, miners, the people who run these computers on the internet, earn a bounty in newly issued Bitcoin if they successfully find and verify a block of transactions before another computer on the network does. And so there's an incentive for people to throw computing power at this, and in a sense, the more powerful the computer, the more quickly they can find and verify these transactions, and in turn get newly issued Bitcoin. Today there are 11 million Bitcoin, roughly 11.5 million Bitcoin. There will only ever be 21 million. And there are roughly 25 newly issued Bitcoin every 10 minutes. And that will get halved in the not distant future to 12.5. and then halved again, and it continues to halve until the number that are issued is very, very infinitesimal over time. A lot of people often say, well, if there's only 21 million, you know, that's not that many. What if we all want one? Well, that's not enough for the world. And so one of the key things is today people focus on one Bitcoin as a unit, but as I noted, they're divisible to 8 digits. And so if the 8th decimal point of a Bitcoin was worth $1, the total market capitalization of Bitcoin would be $2.1 quadrillion. And so it's scalable to contain a lot of economic activity. It is not limited to individuals trading one individual unit or atomic unit. What's happened here is astounding. There's been a dramatic evolution in the computing and processing power of the Bitcoin network over the past 12 months, literally even over the past several weeks and the several weeks before it. This is a recent little news article on a site. Bitcoin network speed breaks 1 petahash per second. I can report that in the last month, that's now doubled. It's now 2 petahash per second. And you're probably asking, I don't know what a petahash is. I don't know if I care. But it's actually a pretty impressive number. When earlier this year, the network speed, and I'll explain what that means. The network speed was 250 gigahash per second. So that was a quarter the size of the 1 petahash per second. That 250 gigahash per second computing power was equal to the 500 largest supercomputers in the world combined. So it's a lot of computing power. And so then it quadrupled that, and now it's doubled that as well. And so basically, this hash measure is essentially the mechanism in Bitcoin, these hash keys, which are the cryptographic functions that secure transactions, verify transactions, and store addresses and keys, are all computed by computers on this network. And so it's an incredible amount of computing power that's now available that is running this network at a global scale. This is just a chart from a site that shows you that growth rate in the network speed. And so you can see back in July, it was down at 250, and it's just been growing incredibly fast. And as I noted, it just went from 1 petahash to over 2 petahash just in the last weeks. Well, what is this? People are like, well, what are these computers? Like, have I ever seen these? Well, here's an example of a farm of mining computers. And a lot of this has been done historically, or up until very recently, by amateur enthusiasts who basically would take originally their computers and just say, oh, I'm going to plug this in and let my computer be used to process transactions. Well, then people started to get more specialized and used specialized boards that had been made for things like gaming systems and stack them up and get more computing power and then generate the mined coins and fees from that. And that's actually gone to the next level, which is there's been a growth. In fact, dozens of new companies have emerged that are designing what are called ASICs, or what's an application-specific integrated circuit, which is a specific computing chip with specific silicon wafers that embed within it the protocols for processing Bitcoin. And so there are chip foundries around the world who are now making these ASIC chips that are all their entire purpose. It's not a general purpose computer like a CPU. It's a Bitcoin-specific computer that just does these transactions. And each chip, some of these chips have computing power for this task specifically that is tens of thousands of times more powerful than your smartphone or your desktop computer. And so a high degree of specialization that's gone into it. And we're seeing some of these companies, come out with, these, fully commercialized products that one can use. And so what's happening is this is going from an amateur universe into an institutional universe where there are venture-backed companies that are basically building farms of these to provide the infrastructure to run this network. This is just a photo. There's a real-time view you can see of all of the transactions being processed in near real time from all around the world. And you can see that this is a very global phenomenon. These computers that are running this network are in every corner of the world and can just be plugged into the internet and participate on this network very easily. So another question I often get is, how does this technology evolve? Who controls this? Who governs this, et cetera? And the answer is actually pretty straightforward. it's a lot like the way the internet works. It's a lot like the way all the technology that we take for granted in our lives on the internet works, which is it's based on open source and open standards. Those open standard protocols are debated in public amongst the technical decision makers and contributors, and all of the intellectual property is freely available for anyone to use anywhere in the world. Today, there are already thousands of developers that are actively working on enhancements, bug fixes, improvements, changes, etc., which is, again, the way almost all the software that is running on our computers, except for the Microsoft devices in your lives, works. So, what are some examples of that? So there's a lot of work happening around scalability. The traffic growth and usage has been growing, and they really want this to be more scalable than it is today. There's a lot of work around what's called wallet security, ensuring that those private keys that you have, which actually control the spending of money, are really secure in a usable way. There's a lot of work going into kind of improvements in the payments model itself, making the payment user experience between a merchant and a consumer much, much easier, providing some accounting methods for the merchant as part of that as well. So a lot of interesting work happening in a globally distributed fashion. And as I noted, this is very similar to virtually every internet technology that we use in our daily lives, whether it be the web browsers we use, the email systems we use, and so on. So market opportunities, I've touched on some of these, and then I'll turn it over to John for the, I think, much more exciting legal and regulatory environment discussion, which is a real issue here. It is probably the core business issue, in fact. But nonetheless, reduce the cost of payments and money transfers globally, increase the ease of use, that user experience of money discussion, really critically enhance that security and privacy of financial transactions and reduce fraud that we see so prevalent in a connected environment, radically reduce the cost and friction of cross-border payments, create new options for the global un/underbanked, and then enable new levels of pricing and transactions that our existing financial system hasn't been able to support easily. So a lot of opportunities here, a lot of value out there to capture. So with that, I'm going to turn it over to John, and then we'll do questions at the end.
Thank you. And this will now be the technology-free portion of the program. I am the lawyer, the token lawyer for the group, but and I hope we do have plenty of time for questions, because it's always interesting to hear what others think about this space. It's an emerging space. And I can just tell you, when I first went and talked to Jeremy and just was trying to decide whether to take the job, I had a discussion, about an hour, 2-hour discussion with my wife. At the end of it, she just gave me this blank look and said, if you think it's a good idea, go do it. So definitely want to hear from you. One of the things Con failed to mention with this fine introduction was I am also a professor at the Banking and Financial Law program. And Lorraine is here today, and some of my students and former students are here, so welcome. And this space is really emerging, and people have questioned me. Why did you want to leave banking? The wonderful world of banking, to go to, to work in the digital currency space. But the writing is kind of on the wall for banking, and it's really a challenging environment. You look at post-financial crisis, the challenges of net interest margin, the expenses associated with compliance issues, the number of regulations associated with Dodd-Frank and beyond, the technology issues, information security, which Jeremy alluded to, and the issues around security is costing banks thousands and thousands of millions of dollars every year. And then you look at the flip side, and you look at the market that Jeremy alluded to, with the money transmission market on a global basis, and there's a lot of market share there. There's a lot of changes in payment technologies. You see it going back a number of years. PayPal, and prepaid cards, and further emerging technologies. And I think it's the wave of the future. And I think these are good times, and as Con mentioned, interesting times. But we don't escape challenges, and in this space there is a lot of challenges. And my job, yes, is to keep Jeremy out of jail, and to make sure that we are, when we go forward in this space, we want to be, best in class when we're putting together as an industry, and certainly as a company. We want to make sure we're ahead of these issues. And similar to what we've seen in the last few years, with the financial crisis, or just the history of any of financial institutions and banking, securities laws, everything's a reaction, right? It's a reaction to events in history. It's a reaction to, you know, all the laws we have on the books. If you look at things like FDIC insurance and, you know, Glass-Steagall and things like that, of course, that was a reaction to the stock market crash in the late 20s. And the laws will emerge in this area the same fashion. When there's a critical crisis, I think at this point it's a lot of a wait and see from the regulators, from the lawmakers, waiting to see if this, you know, what Bitcoin does, what digital currency does. Will it reach that point of critical mass? But we're starting to see some events now that are starting to shape the way things are going to play out. And I've listed a few here. You know, starting back in May, we had one of the largest exchanges of Bitcoin, Japanese-based exchange, was shut down for failing to operate as a money service business, as a money transmitter. And then following that, we had the New York. Of course, New York is always ahead of the curve on a lot of things. They sent out cast a broad net. They sent out a subpoena to all the companies operating in this space. A subpoena, give us information. We want to know more. We want to learn more about the risks. Certainly concerns about risks around security, consumer protection, money laundering. So that they sent out that notice. I'm sorry, I was thinking of the next slide, but the New York Department of Financial Services sent out that notice back in, I believe it was August. But before that, we had the Liberty Reserve case, which was another big event that happened, which this digital currency provider, Liberty Reserve, a little different than the Bitcoin we're talking about. This was a centralized digital currency provider, and in a centralized environment, there's one administrator, was this Liberty Reserve, and they were, you know, conducting millions and millions of transactions for illicit purposes. And eventually, the Department of Justice brought this case along with the New York Attorney General, and just recently, I believe the owner just pled guilty and is facing 75 years in prison for this particular activity. So, you know, there's a lot of risk here in this space. In August, the SEC brought an action related to Bitcoin for a Ponzi scheme, and a couple interesting things came out of that case. So, a federal judge said a couple of big things. Said, first of all, yes, this is currency. Okay, because when we look at the regulations, we'll talk in a minute about the different agencies and their take on it. What they're going to look at, what is this? What are we dealing with? Is it cash? Is it currency? Is it security? Is it a commodity? And that's going to matter. So at least you have one judge here in Texas stating that this is actually a currency. Like I said, I mentioned in August, the New York Department of Financial Services is very engaged in this. You know, they want to know more about the risks. They're you know, reaching out to the industry, and the industry is starting to reach back out. And you know, one of the biggest things here is we need to have an ongoing dialogue with the regulators on these issues. One of the biggest, you know, Bitcoin-related news items that's really hit the mainstream media is this Silk Road situation. And many of you might have heard of Silk Road. This was kind of a black market exchange that was conducting a lot of transactions using Bitcoin. Was actually shut down. It was shut down by the FBI, and there was a large amount of Bitcoin that were confiscated. You know, a lot of issues now around that. One is, you know, the FBI first is having issues decrypting it and getting access to the Bitcoin to be able to spend it, and then next they have to actually, you know, that's an asset that they have to get rid of. So that's going to be a challenge as well to see how that plays out. But again, this was a huge operation of enormous proportion. But you know, this is actually, we view it as a positive thing that this is out there, and that the fact that yes, similar to the traditional financial institution space, there is going to be people, you know, conducting money laundering, drug trafficking, and the like. But they, as you see here, they can be caught and they can be prosecuted. So that's going to be an important thing going forward. And you know, you'll continue to see other exchanges like this popping up, other websites. You know, it's not going to go away. But we do think that you know, this space, as Jeremy pointed out, there is a lot of security to it, And now we're seeing a lot of regulations, and we will, within the industry, act to have the compliance programs in place to minimize these risks. But again, the U.S. is a little different. We'll talk about the difference between the U.S. and Europe. The U.S. is a little more stringent now. You see exchanges such as the British Exchange CoinFloor has it started operations in the U.K., but they've banned U.S. clients because of the issues between U.S. And European regulations and the differences of the like. So what are the core issues? What does it really come down to? And what do we need to worry about as an industry and as consumers utilizing these goods and services? Really, it comes down to the biggest thing that you see in the space is the money laundering. Because of the anonymity of the product, so it really, what the regulators are going to look to and have looked to is making sure that, the industry has programs such as Know Your Customer, the ability to monitor transactions in this space, and to prevent these types of transactions for being used for money laundering and the like. There's certainly a lot of other concerns, privacy, information security, consumer protection issues, taxation issues, and securities issues. Like I said, is this a currency, is it a security? There's still some open questions there as well. But I think in the end, more likely than not, we're going to see Bitcoin being legal money and be regulated under all relevant bank laws and be treated as taxable income. Now, the way that's taxed is, again, going to be a question. Okay, so who are the interested parties? Okay, certainly the federal bank regulators will have a deep interest here, and they have already. The Federal Reserve is conducting a study as of June on the risks associated with Bitcoin. FinCEN, which is the Financial Crimes Enforcement Network, Department of the Treasury, has come down and issued guidance here. And they've said, again, like I discussed, there's a need to have money laundering anti-money laundering program in place. You have to register as a money transmitter, money service business with FinCEN. And so that's very important. But you're also going to see, other, not only in the U.S., abroad, central bankers are going to get more and more involved. Jeremy had that picture of the international banks and in Switzerland and BIS, and there's going to be a need for more discussion around this space as Bitcoin and digital currency kind of hits that point of critical mass, and certainly those areas which have less stable currency, you're seeing a lot of concern from central bankers there. Areas such as Cyprus or things like that, where there's either taxes on deposits or high inflation, you're seeing a lot more concern from the government in this space. The Consumer Financial Protection Bureau, one of our favorite new agencies under Dodd-Frank, will obviously have a very important say here because this does have a consumer protection issue associated with it. It is a consumer, could be seen as a consumer product, and there's a lot of new regulations in that space, Regulation E, remittances, international transactions, international money exchanges. How's that going to look? What is for example, what are the disclosures we're going to need to provide in that space? And how's that going to differ from, a traditional money transmitter? So it's going to be interesting to see how that plays out. The states, similar to the federal government and the Treasury, see this as a money transmission business for the most part, so they require licensing in each state. The attorneys general, of course, will be involved as well from a consumer protection standpoint, and we'll have concerns there as well. One of the other issues that many people haven't discussed is the tax issue here. So, how do you tax this, or what are the tax implications? We discussed internally, and some companies in the space are paying their employees in Bitcoin. And what does that look from an income tax standpoint? And transactions, when you exchange in and out of currency, in your fiat currency, how is that taxed? So obviously, the IRS has looked at this. I think anytime you gain value, they see it as income, but we need more guidance from the IRS and from FASB on accounting. You talk to the big four accountants, they're scratching their head. They're not really sure how they want to deal with this space. So it's going to be interesting to see how that plays out. As I mentioned, the SEC and the CFTC are again looking at this area, determining, do we have to deal with this as a commodity, as a security? Those are open issues. Unfortunately, a lot of what I'm discussing today, there's more questions than answers. The one thing we do know, it's, for the most part, we're being treated as a money transmitter. But beyond that, there's a lot of pitfalls and a lot of areas that we need to look. Congress is very engaged now that they're finally back in business, and the shutdown and everything is completed. There's probably going to be some hearings coming up very shortly, and the industry will be involved. Really, the two committees that are engaged on this are Senate Banking and the Homeland Security Committee. But they want to know what the risks are, and they want to know, and it's been encouraging, some of the discussions that the industry has already had. That at least they're open, they're listening. The same thing with the regulators. They just want to understand. But the flip side of that is they're not really enthused to act too quickly on this. There's no real need to act. Again, usually we see action when there's a crisis, and we haven't reached that point. So that makes it a little uncertain for those of us engaging in the space, as far as when you don't have that regulatory certainty, you got to kind of dip your toe into the water and take a little bit of a leap and try to do the best you can. Like I said, we do have some guidance from FinCEN. So they discussed what is this considered. They use that term virtual currency. We use the term digital currency for the most part when we talk about it. But when they define it, really the key is that it's defined as a medium of exchange. It has similar attributes to regular currency. It doesn't have that legal status, but again, it's that medium of exchange, which is the key part of the definition. And that's why we're kind of in this world now of the money services businesses. And it's an exchange. It's a currency that's able to be converted, and we can exchange it, and they can exchange it into various currencies. Who is regulated? It's not the users, it's not the consumers, it's really those who are doing the exchange. It's those, similar to Circle, who is more the administrators of it, dealing with the consumer and the merchant products. So those are the ones that will need to register and deal with the regulators from that standpoint. And from a global standpoint, you have varying degrees of involvement or understanding or thought process here. The EU is taking kind of a hands-off approach initially. They really, you see here there was a European Central Bank publication in the fall. They talked about, they're looking at this, they're concerned, they want to know more, but they really haven't. They see that really hasn't reached. It's really not on the radar screen. It's still an emerging industry, and there's not enough to really be of concern. So they're not, at this point, they're deciding not to really regulate it or over-regulate it. And that's why you're seeing, more companies going and operating internationally, at least in the EU. Germany is has taken more of a positive approach. There are some limited requirements from a regulation and licensing standpoint. And China, again, is taking a hands-off approach. But you're seeing a lot of market share. A lot of, you might have heard some reports of the Chinese Google, I won't attempt to pronounce what Baidu, is they're accepting Bitcoin. In Germany, you're seeing some larger game companies accepting Bitcoin. So you're seeing, again, which makes sense, more of with less of the regulatory pressures, you're seeing more and more international operations in those spaces taking off. So it's very important. And it's very important for us to monitor that going forward, because again, from our standpoint, we will be conducting international operations. Mentioned the issues with more of the countries in crisis and how they're dealing with it, and their central authorities, which are taking a harder look at Bitcoin and the potential interaction with their particular countries. And really, at the end of the day, it's important that we have more international standards and coordination in these areas. So really, what is this going to look like for us, or a company like us? Any company, whether it's an exchange, whether it's a company like Circle or any of our competitors, what does it look like from a regulatory standpoint on a day-to-day basis? Well, the biggest thing we need to do is we register with FinCEN as an MSB. We'll need to file applications in all 50 states and comply with all those regulations. and international locations as well as needed. But really the biggest thing we need to do is make sure that we have that robust AML program, compliance program. We know our customers, we monitor transactions, and we'll also have to do things similar to banking. We'll need to report suspicious activities, certain currency transactions. But again, that's for an emerging industry and a smaller company, that's going to be challenging. How do you do that? How do you monitor the transactions? What thresholds do you set? What's considered a high-risk customer? A little different than traditional banking space, but nevertheless, it's important for us to have. And when we have, regulators, it's going to be interesting also to see how do these states, what are they going to do with these applications? They're reticent to act on the applications, and then even if they do, what are they going to do from an overall examination or overview standpoint on an ongoing basis? So that will be interesting to see what happens there. And the biggest thing really is that this is such a fast-moving environment. We need to monitor it. We need to look at. We need to engage in dialogue. We need to be proactive. Discussions with Congress, with the lawmakers, with the regulators, and we've done that. And there's also some efforts to combine with industry best practices. There's the Bitcoin Foundation, which is one of the larger kind of trade associations in this space, and there's also this Digital Asset Transfer Authority, which is an attempt to also combine and act more of, I wouldn't say, an SRO. I don't think we're there yet as a self-regulatory authority or organization, but really to kind of combine best practices and say, this is what we need to do. This is kind of best in class, and just all of us as an industry sign off on it and say, we will comply in this matter. So, certainly, there's this regulatory environment is really going to evolve rapidly. Probably not as quickly as those what do you call those hashes? Petahash, but it's going to go pretty quick, and but again, it should be interesting to see what the discourse is going forward. So that's just a quick overview. Just wanted to give you a little flavor of what's going on in the legal regulatory space, and then why don't we open it up to questions to either Jeremy.
Maybe due to proximity of the mic being important, if you could just stand there. We have some ample time for questions. I would only ask that whoever is asking the question use the mic, and the mic is where?
I can repeat. We can repeat the question too. Yeah.
Here comes the mic. And you fix healthcare.gov while you're doing this, by the way.
Okay. And can you just introduce yourself, especially if you're with press, please? Thank you.
My name is Fred Bash. I'm a retired engineer, business person. And first, appreciate the openness and putting out forth on the screen all the issues that, as you suggest, are more questions than answers. So let me ask I think is a very simple question. Jeremy, you said that a Bitcoin was about $200 these days. You put a slide up there that said Bitcoin was $140, which I assume was an older slide.
Right.
So I bought one for $140. Today I'm selling it for $200. Where's the other $60 come from?
From another individual who's valuing that Bitcoin higher.
Sounds a little bit like a Ponzi scheme, doesn't it?
I'm not sure I understand.
Well, the money's coming from a future investor and being paid to an early investor.
It's a free-floating exchange. I mean,
okay, so it can go up or it can go down.
Absolutely.
So there's all these different agencies that can do the conversion. Can you convert it for 210 and somebody else convert it for 200 as a?
Yeah. So the pricing on the different exchanges varies some, and there's absolutely some market participants that essentially are looking to arbitrage pricing differences amongst exchanges.
Okay,
but it's getting pretty efficient in that there's now kind of real-time data feeds on the pricing behavior of every exchange that's out there, and so it's more and more difficult to arbitrage on that basis.
Hi, I'm Ethan Heilman. I'm a research fellow at BU, and I was wondering if you could speak to whether any of the regulators have looked at Zero Coin, which is this attempt to blind transactions and blind wallets such that they become anonymized. Since they're sort of pseudo-anonymous in the way in which they work.
I can try and take that. Yeah.
Talk to
Sure.
the actual product itself. But.
Yeah, so Zero Coin is an example of an altcoin, one of these other projects that have forked from Bitcoin, and I'm familiar with that. I don't think that there's much regulatory attention right now on anything except for Bitcoin, with the exception of things like Liberty Reserve, which were clearly organized by bad actors. I think, if anything, I think something like Zero Coin would be frowned upon even further by the regulatory community, because even the pseudonymity of Bitcoin is considered to be not sufficient for dealing with Bank Secrecy Act type regulations.
Can I respond?
Sure, yeah.
So maybe I chose Zero Coin as a bad example, but there are these schemes which allow you to say mix your wallets or mix your transactions,
yes.
Such that they become anonymous
Sure,
again.
yeah.
And I was just wondering if regulators have addressed that, whether that would just be a sign of a bad actor, and they'd say, "All right, watch out."
I
for
think
these
that
people,"
those have been looked at and they're frowned upon.
All right.
And so I think if you were trying to do that as a commercial service, you would probably get shut down by the government, is my guess.
Ozshai, Boston Fed, you mentioned ACH connections. Now, only banks have access to the ACH.
Right.
So how Bitcoin coordinates with banks? I
Yeah.
mean, there should be some link that you missed to explain.
Right. So this is specifically actually it's a great connection between John's section, which is essentially what the Treasury Department and FinCEN has said is if you want to operate an exchange, which allows someone to purchase and or sell digital currency for U.S. dollars, et cetera, that business needs to be registered as a money services business, as a money transmitter. And of course, the only way that that business would be able to provide that product to a consumer is in partnership with commercial banks. So it's commercial banking partnerships with money services businesses that are launching in this space.
Bob Botcher, Citigroup, retired. As I understand it, Circle is the keeper of the digital books, and I'm wondering what happens if you're successful, get partway out there to your $250 billion, and all of a sudden Circle disappears.
Sure. So it's a great question. So Circle itself, make a clear distinction. We're a software and online services company that's building products on top of the digital currency protocols that are out there. And so we are actually, in some ways, we're not the keeper of the books. The blockchain, which is this global general ledger, is the keeper of the books and has a record of every address in Bitcoin and the owner of that asset associated with that address. The nice thing about these being built on open standards is that any wallet, if you want to call it that, that's the nomenclature used here, is built on open protocols, and thus a consumer or a user of one wallet can very easily transfer or extract that and apply it with another wallet or another service. And so there's zero lock-in at a technical level in many respects. And so that would be, if we grew and we were successful, that's great, and people would want to continue to, host with us. If there's another service that emerges that provides a better value or better user experience or better tools or what have you, there's instant portability for those users. And so again, it's sort of open formats and open protocols that allows for the portability of that asset.
My name is Alec Petro. I run a hedge fund in Boston, but I also support 3 different Bitcoin exchanges making liquidity. I am also a Litecoin and a Bitcoin miner. And I have a question for each of you. One is, Jeremy, how do you view the secondary currency where we mine Litecoin, which is a secondary currency? How do you view currencies other than Bitcoin going down the line?
Yeah.
And my regulatory question is, how do you view when the regulatory environment clears for you? When do you think that happens? We're grappling with the 50 state registration for some of these exchanges that we are involved in. In fact, we're, as a Massachusetts entity, some of them are saying that Massachusetts is kind of clear compared to some of the other states. When do you think that the regulatory environment clears for you so that you can actually do your business?
Right. happy to answer the first question. My view is that with something as sort of fundamental as payment protocols and money formats, that on a global basis in the internet space, value will accrue very rapidly to those formats that have achieved real network effects and economies of scale. And so I'm generally very skeptical of other forked coins or other forked architectures compared to Bitcoin. And so that's sort of my view today. I think that could change if, and this relates to the regulatory environment, if the regulatory environment said, you know what, there's not enough identity not enough of an identity mechanism in Bitcoin, and they work with industry to fork Bitcoin into something that has more identity mechanisms in it. For example, I'm not sure that will happen, but that could you could see things emerge from something like that as an example.
Multiple currencies you think can coexist, holding value?
I'm sure in theory, yeah, they could. I'm not convinced at this stage, given how nascent even just Bitcoin is, that the market would support that right now.
Yeah, I think it's going to be interesting to see when the regulators decide they want to act on this, and what's going to be the driver of that. Is it going to be market driven, a hue and cry for people to have products in this space, or is it going to be the states have a real opportunity to kind of push this, and certain states could step up and take the lead. We're hearing good things from states like Texas, versus other states like New York are obviously more reticent to act on applications. So we'll see if we can get a few states to go out there and kind of take the lead and start to gain some momentum from that standpoint. We could be see some progress there. On the federal side, again, it's going to be how to a lot of education, outreach from the industry. We're going to see some Senate hearings. How do those go? And if we if we have a couple more Silk Road situations, that could negatively impact it. So it's going to be a lot of, what are the kind of the events in the interim? Can we get regulators, lawmakers comfortable with the products and services and with the things we're doing? And that's why, again, we want to be proactive on this. And I think, again, the message has been pretty positive from this standpoint. I think we're going to start to get some momentum. If we don't have any of those negative events that I talked about, I think we might see some more progress, maybe the mid part of next year or later next year.
Do you think that, just one last thing, do you
Yeah.
think that the 50-state registration versus just a FinCEN registration makes sense? I mean, some people think that, why bother going in 50 state? That makes it difficult. We support, as I said, exchanges that are much less capitalized than you guys. And the difficulty for 50-state registration is
Some companies have opted not to register, saying that this is still not, there's been no clear guidance on it, and we're not necessarily legally a money transmitter, and they've taken that approach, and they said, we don't need to register at this point until you give us some more firm guidance. And that's that's an approach that you take from a business risk and a legal risk standpoint. We've taken the other approach, but, it can go either way. I don't know if you want to add to that.
Fair.
Hi, my name is Jeff Keok. I'm a student at the law school. My question, I guess, is about the Silk Road indictment and all the asset forfeitures involved in that. I mean, so you have the removal of about 3.5% of the Bitcoins in circulation, and the deflationary effect of that, and the retardation of trade utility by removing what seems to have been a very large market participant. I mean, how can other legal market participants insulate themselves from all the uncertainty and instabilities involved in that kind of system? I mean, if we have just one Silk Road, or if we have more down the road, so how do you insulate yourself from that?
Yeah, I mean, this gets to a comment I made, I think, earlier, which is that a currency like Bitcoin, I think, will only achieve mainstream adoption and value if you have very large, significant market makers in it, and institutional, if not governmental. And I know that sort of might be heresy to say that to some members of the user community, but I think that is a fundamental issue, and that can take place in a lot of different ways, and that can take place, I think, very incrementally over time as well. But I think there are certainly institutional players that are now looking very seriously at this as a significant long-term opportunity as well. And so I think you'll see, some of that institutional market making coming into this market going forward. That's at least my perception at a high level.
Time for one more question, if there is one. Yes, right here.
Hi, my name is Matthew Colossi. I'm a JD student and also doing a master's in international relations. One question I have: so you're talking about the idea of a currency, of a kind of alternative currency, but in the end, if we're talking about an alternative to the dollar, I mean, in the Bretton Woods system, I mean, some people were predicting the euro as an alternative to the U.S. dollar, and now, but now people have stopped talking about that. I can't imagine why, but but now without the support of a national government, does Bitcoin risk remaining kind of an interesting experiment, or maybe a new class of security without really gaining the identity of a currency, especially because with something like this, couldn't it be open to some kind of fraud or hacking or bubbles in particular? And is that and do you think maybe what should we call them, normal currencies or currencies backed by governments, will they be able to maybe learn something from Bitcoin, or maybe try to implement some of these digital technologies?
Yes, I'll take that. I think there are a lot of statements and questions there, so I don't know that I can address all of those. I think the key thing that hopefully was highlighted in my presentation is that a lot of the fundamental value here is about taking cost out of the payment system and really reducing the friction and cost associated with that on a global basis. And you can break that down in a lot of different ways. The settlement process for an interbank transfer was built many decades ago to deal with checks that were coming in, between user participants, and it hasn't evolved a great deal. And so there's just some, I think, fundamental architectural limitations in how payments and money transfers take place, and I think that this is representative of applying distributed, decentralized computing and global connectivity to solve some of those problems in a very open and powerful way. I think it is also critical to understand that market participants, including governments, have a lot to say about that, and I think will continue to have a lot to say about that, and will participate in that market in different ways. And in some ways, I think that there's long-term convergence between what I would describe today as a very bottoms-up movement around this on a global basis, and a sort of very top-down view of the international financial regulatory regimes out of Basel and other places. And I think, post-financial crisis, I think a lot of the leaders of the world central banks have a lot of legitimate open questions about the efficacy of the international dollar system today. And in 2009, 2010, the head of the IMF, the head of the People's Bank of China, the head of a number of other central banks in Europe, were concerned about the dependence that the world economy has on the international dollar system, and that's a very legitimate question. I'm not saying Bitcoin's the answer to that. Certainly that's not the case. But it does raise the issue of, over time, with the degree of interdependency that we now face, is there a better system that can be built that presents fundamental economic change in the payment system as well and benefits consumers? That's what I think this is sort of going after. I'm not sure I answered your question because it was varied and I gave a somewhat varied answer, but hopefully that's helpful.
Great. Well, thank you very much, gentlemen. This is terrific. If I could just squeeze in here for a minute. I was prepared to pay a substantial honorarium to both of you for being here today, but I know you will only take payments in Bitcoins, and since I don't have any, you'll have to send me some so then I can return them to you. In lieu of that, I would like to give you a portfolio for the Center for Finance, Law, and Policy, which has in it something you may recall called paper. And I hope you will each take yours. Yours, John, is over there.